And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Happy Tuesday, the first day of February. Okay, let's jump right into some underlying market dynamics. And well, in the last 24 hours, a lot of things were confirmed for the long-term time frames, such as a monthly. We had the first monthly close of 2022 yesterday, which more or less, things are not bullish, not great for the long term for price action. However, in the short term, in the medium term, price action looks like it's going to be okay. Now, short term, I'm talking about 4 hour, 12 hour, maybe in a daily. But really quick, wanted to again remind you, we're giving away $100 worth of free Bitcoin tomorrow. So to enter to win, all you have to do, email 5 of your friends a link to this YouTube video, copy my lovely assistant, Dana, and that's Dana at bitcoinadvisors.com, and she'll enter you to win. We're going to draw from the bowl tomorrow afternoon. Literally, it's going to be the easiest $100 in Bitcoin somebody wins, because guess what? Probably nobody's going to even, there's probably going to be 2 or 3 people that send the email, and so your chances of winning are really, really high. Anyways, so starting off with Bitcoin, I'm going to get into some of the global open interest here. What's going on here? Is that our open interest chart? Is that it? Bitcoin global open interest. Yes, this is the one I want to look at. Open interest is all the money being put on the futures and derivative products in Bitcoin, people going along with leverage. Open interest means all the money, right, that's being put on the market, and open interest is currently hovering at, oh, guess what? I got to sign in again. There's my personal email. Don't tell anybody. Okay. Here it is. Open interest coming in at 10.66 billion. And again, the idea we've kind of been mulling over in the past week is that Bitcoin was more likely to put in a little bit of a bounce here. And as you see open interest come up, that's kind of an indicator prices are going to go up. As open interest comes down, typically prices go down. However, so in the short term, yes, we're looking for a bounce. However, in the longer term time frames, we've got a much different picture forming. And the different picture is perhaps going to be best represented by that global open interest. And that's yet again. So as we do work off the lows, coming from our prior extreme reads, coming off the lows, Bitcoin open interest coming down from about 14 billion here. So here's what I would say is if open interest does want to tick back up above 13 billion, that read with still yet another lower high on the daily time frame, okay, specifically the daily, that would be a good indication that we are still in the throes of a pretty nasty downtrend on the daily. And this is just what's called a corrective rally. And I do think there are several indicators which suggest that is the case on the higher term timeframes. And I really have to be careful with my words, because there's going to be massive differentiation. There's going to be a massive differentiation in the short term and medium term time frame analysis versus our longer term macro or higher term time frame. So what is short term? What is long term? And by my definition, you might have your own, but shorter term, we're talking anything below a 4 hour, medium term, right, is anything between 4 hour and a daily, maybe even up to a 2 day. But the longer term time frames, 5 day and higher, right? 5 day, weekly, monthly, quarterly, those are all the higher term time frames. Those are the most powerful time frames. So again, there is a much different picture when you're looking at the chart here on a monthly time frame versus a 4 hour time frame, right? And we'll be going over that. And what else do I want to point out? The fear and greed index here, which we have been talking about this for some time, saying we want to be in this extremely fearful zone for at least 30 to 60 days before we put a macro low in. And that I'd even extend that out to 90 days, right? We want to see people in the extremely fearful zone. And right now we're coming in at a 28. It does say, yeah, so we're at a 28. So we're in the fearful zone right now. And that is that on the fear and greed index. And then what else do we have here? What else did I wanted to go over? So we will be going over the validation for a macro reversal. And just to be quite honest, I mean, that's not even really relevant right now. We're nowhere even close to seeing that. So back onto our other indicators. We've got the funding rates here. And let's check out our funding rates. Oh, this is actually the, this is the leverage ratio, which I'm just going to pull this over here. And you can see the leverage ratio is at all-time highs. However, we are ticking down slightly from 0.21 to 0.21. So slight tick. It's basically at all-time highs. And that means there is going to be a big, massive move incoming soon. When leverage is to the hill, we're going to get a big move. And we want to see a reset. We want to see that come down back. You know, here's the December lows at 0.15. That was, right before the massive December 6th dump off. And again, something we'll be kind of keeping an eye on for kind of noting, hey, maybe a macro low's in. What else do we want to take a look at? We've got the funding rates, which are still negative, which means negative rates. And really what's more important, Bitcoin is coming off the macro low of 30,000 over the last year, going back to January, right? So we had negative rates going back way back, back to May this year. And when we get negative rates, that's kind of an indicator, hey, you might get a macro low. Anyways, it's not really relevant at the moment, but, the macro low, $30,000 over, the last year. So that did, January, we had $30,000 low, 32, and then we had May, 30,000 right there. And now Bitcoin did come all the way down to about 33,000, got a bounce. And again, I do think we're more likely to have a little bit of a bounce here sooner than not. And why is that? Well, that indicator is very likely to give us a bounce, in my opinion, because typically what happens is, well, the bears just get a little too excited, right? And they think, oh, it's going to go right to 30,000. I was, kind of in that camp. I was thinking pretty likely we'd get a stretch down there, and I do think we do at some point. But right now, this is kind of a corrective rally at best. Basically, we've been moving down the reversal point, ever since 63,000 was broken. But I again, for example, we've been saying, look, if Bitcoin gets back above, XYZ lower high at 60,000, okay, we moved it down to 57,000. Okay, then we moved it down to 52,000. Then we moved it down. Now we've moved it down all the way to 44,000. So again, I do think we're, more on the probability of Bitcoin to take a bounce. I look at probabilities, and we get some continuation to the upside from here. Doesn't mean it happens today, but I would say over the next week or so. And again, why we went over this yesterday, and I think it's a little more clearly seen on the weekly time frame. But yes, we did get a tick above here on spot price action, and that generally will give you a run all the way up to the 9 at 43,087. That's going to be a very important part there, okay? And where does the validation of this move begin? Well, for me, it already began. And if you wanted to front run that decision and put a little risk on and play that move, personally, again, it's not financial advice. I'm just giving you what I'm looking at and how I'd be playing this market. But where would you really want to wait for confirmation for a little bit more of a conservative trader? Starting it off with a 4-hour back above 39,265. That'll definitely get you a move up to 40,000, or the purple 200 right here coming in at, call it 41,000 right there. And with a 4-hour break above 41,000, I do think we'd hit the next target coming in at about, call it 44,000 right there. Okay. And what I would say is this, is you could even use an hourly closure, a 1 hour closure back above 39,250 or 260. And I think that would start the rally. But do we pull back in the short term back down to about 38K? Yes, I could see that easily happening. It looks like it might happen right now. But as long as we do not, we could pull back to 38,000, 37,500 on the short term. But as long as we are maintaining the higher lows on the 4 hour, and as long as we do not get a 4 hour closure back below this guy right here at 38,000, or really, what would invalidate this? What would invalidate this for me? And I would say any kind of a closure below yesterday's low, which is going to be right there at 38,000, right? So that is coming in right there. That would invalidate my, upside continuation bias, that we probably head up towards that $41,000 region over the next few days or week. If we do get validation to the upside, I would look for the higher term timeframes to begin to take over. And again, that would get us into that weekly time frame, which very, very likely will, produce that bounce up to the $42,000 to $44,000 region. And then again, we're going to draw these Fibonacci retracements because they are very, very nice and give some very clear levels to look at when it comes to our higher term time frames. And what I want to do this on the daily, right? And what I will say, and frankly, I don't know why the eraser gets put on there, but this is our last breakdown on the daily, right? So that's where we'll start the bearish retracement out. And we'll go like this, body to body, and you'll see that the 618 comes in right there near the purple 200 and the 0.5. Yeah, we want the 0.5, the 618 and the 0.5 to line up pretty much simultaneously right there, somewhere between the 0.5 and 618, and that is where we traditionally will see what's called a bull trap. Okay, back above the 618, we can talk about a macro reversal in progress. Anything below there, we're just going to be making more lower highs on the weekly time frame and on the daily. Anything below there, we're just making lower highs. And I'm going to look for more downside continuation over a longer period of time. And if we want to draw this out on a weekly, this is the one to be watching them all. You want to go wick to wick. And, on the weekly time frame, bull trap's going to be coming in between the 0.5 and the 618, somewhere right there. And we're going to rinse and repeat this as much as we can so everybody gets it ingrained in their hand. What is a bull trap? How do you trap the bulls? Well, all the bulls get real excited as we're making this new high right here. And then what happens? Boom. We get rejected, come back down, confirm it. But I would say any kind of a weakness in this region between 51 and 52,000, that will be confirmation for me as that we're in a pretty nasty downside, longer term trade to the downside. Okay. What else have we been talking about on the weekly time frames? We've been talking about on the monthly time frame. And I'll pull up our secondary chart here. And we had the monthly MACD cross to the downside. And we noted that anytime this has happened in the past, we've had some, pretty nasty moves to the downside. One back here, that was coronavirus dump. And then that was the 2018 dump. And then there was another one back here. Whoa. And for all of you out there enjoying the charting, yeah, that was the August 2014 dump. And let's just for kicks see what happened there. August 2014, coming in right here. Oh, we get the cross right here. And it doesn't look like much. I'm going to get these Bollinger Bands off. And that, whatever that is, I don't know what that is, but bear with me just a second. So this produced August 2014. So I'm going to get these back on just to see where that crosses. So it came in right here. It doesn't look like that big of a move on this graph right here, but if you actually take a look at it now, August 2014, right around my birthday, right? We're talking about, oops, wrong tool. We got here's our ruler over here. This is a real nice fun one to get some measurements. So that was a 76% down, okay? Now, so we had the monthly MACD just confirmed across to the downside, and again, proceeded some pretty nasty dumps in the past. And what else do we have happening here? I'm going to put our primary chart back on. Excuse me, that one. And basically, the next thing I want to look at is our Stokes. So we had the bearish divergence play, and we have said that, look, if you are going to take profit as somebody who shorted the market, typically that's your take profit on the yellow 21. And that was bearish divergence as price made a higher high here and RSI made a lower high there. And that was a very, very technical chart, a technical move down to the yellow 21. And that's usually your first target. Now, what else do we have confirmed here? Stokes are crossing down on the monthly. So you got Stokes coming down below 54,000. So any kind of a monthly closure below 54,000 and Stokes will remain to the downside, momentum to the downside. And that is pressure to the downside for the long term. Okay. And I would say the monthly is absolutely wrecked. But on the daily time frame, doesn't mean we can't get a bounce right here for 10,000, 20,000. It could bounce quite a bit. 10 or 15,000. I don't think it goes that high, but that is just my opinion. And I would say, again, you're looking worst case scenario. People are asking, well, how low can it go? Personally, I don't think Bitcoin will close a monthly close, right? So a closure is where the body closes, not the wick, right? Can we get a wick below here? Yes. So monthly, worst case scenario, I don't think we close below 23 to 25,000. And that is in confluence with the CME gap, which we've been talking about right here. And there is some of our little predictor lines right there. And again, another reason we get a bounce, a backfill off this guy, we got the test on the 21 and backfill comes up to 41, all the way up to the 9 at 44,000. Perfectly normal. And, often it happens more often than not. So I did want to offer up some of the hopium on the other side of the fence and in the short-term time frames. And I want to bring the 4-hour daily. Okay, the daily can get above 40. Excuse me. Let's look at spot price action. That's the CMEs. Let's look at the spot price. So if the daily can close back above, call it 40,000 bucks, our last kind of breakdown region there. No, I would move that. Yeah, around 40,600, a daily back above there. And I am going to look for a quick move up to the green 55 or 44,000, somewhere in that range. And what do we have here? We have Stokes on the daily, on the CME. So daily Stokes will remain up as long as Bitcoin is above 36,900, which does coincide perfectly with the lower term time frames. Additionally, we have the 2 days crossing up, 3 days barely crossed up, 5 days we did get a confirmation of that, and 5-day Stokes, 5-day momentum will remain to the upside as long as Bitcoin is closing 5 days above 36,600. And we went over this yesterday. The 5-day closure, Stokes crossing up, has only happened 4 times, and it's produced nothing less than a 25% bounce. My point is that this could be a macro low, and how would we confirm this to be a macro low? Well, on the macro low, on the 5-day time frame, wow, we got a lot of lines on that one. On the 5-day, we need to see our first higher high, right? And then a higher low. And that will not be happening anytime soon. You want to know why? Well, I wouldn't even consider this a a high, right? That's just way too shallow. This is just a big, big lower low right here. And this will confirm with any kind of a closure back above this guy, 5-day closure back above the last weekly high. Some would call that anyways. And what else do we have on the BBWP? So we do have volatility expanding, Stokes crossing up. We're in the bearish control zone. So, yep, does it want to bounce from this region, this low region? I think more likely than not. Okay, so once we do get the bounce, it is going to be a question of, is this a lower high or not? Are we going to put in a lower high somewhere around 50,600? I don't think so. In this case, I think, again, theoretically, can I even say it? Theoretically, it's going to take a long time for this thing to reverse because it's just got so far to go, right? But back on to the shorter term time frames, like a 4-hour. And what I would say here on the 4-hour, again, as long as we are maintaining these higher lows, as long as we're maintaining the higher lows on the 4-hour, it's all going to be, floating on up to the upside, right? And where would I put invalidation on this fellow again here? We're talking about invalidation with a 4-hour closure back below 36,600. Okay. So wrapping up my thoughts here. Again, we're going to get continuation on this guy with any kind of a 4-hour closure back above, call it 39,000. And I actually think we already got that move based off the weekly tick above, and we did have this 4-hour closure. We got our first higher high on the 4-hour, and it looks like we are just hanging along this and coming back down with a wick down to 30, somewhere around there. As long as we don't close below this guy at 38,000, I am looking for that thing to move onwards and upwards. Okay, so that's wrapping it up for Bitcoin. Let's move it on to Ethereum on the 4-hour. And are we going to get a chance to extend this rally up to $3,000? I do think so. And I do believe if we get any kind of a closure back above $3,000 here at the 200, I would extend that move back up to 3,300 to the upside, coming in right here. And I wonder if that's better seen on CME. Yeah. So any kind of a 4-hour closure back above $3,045. I'm looking for a move back up to 3,400 with a short-term stop and probably continuation up to about 3,600. And why is that? Well, we've had, 3 times the volatility read has maxed out at 100% in this downtrend. So I think we are due for a bit of a relief rally. Okay. What else did I want to bring up? Mr. Phantom FTM versus the US dollar. Here's what I would say about Phantom, and this is pretty easy. Any kind of a 4-hour closure back above 224, and I'm looking for a move back up to about at least up to 244, okay? Any kind of a 4-hour closure below 190, that's bad, and I think we'll tag 177 again below there. Probably going to revisit those lows at about 130. Okay, right now, Phantom is just sitting in the middle of range, and it's not real easy to judge anything from there. But if Bitcoin does want to play out of bounds, I think Phantom probably plays along with it. Okay. What else do we got on Phantom here? Mr. Phantom, yep, and it does look like, we're kind of trying to put in a little bit of a low right here, and not a macro low, but just a low, and a lot of coins are doing this right now. Yeah, so moving on, Atom, Cosmos, symbol ATOM versus US dollar. And here's what I would say, below 28, looking for a run back to the lows of about 25 or, yeah, somewhere around 25 bucks, $26, something like that. On the other side of that, though, if we do get a 1-hour closure back above the high right here, $30.25, I'd look for a run all the way up to call it 33 bucks right there. Okay. And I would say even an hourly closure back above $30 and a quarter, and we get a move all the way up to 33, which isn't much, right? And I could see symbol Atom versus US dollar doing that with a little bit of a sneeze. Okay. So that's it for today, guys. And again, don't forget to share this video with your friends, your neighbors. And if you do want to set up a TradingView account and follow along with us, you can get a link for that in the description below. It's a referral link, and it will teach you to set up a TradingView account for free. And my last shill here, we do crypto IRAs, so you can put Bitcoin and altcoins in your retirement. Why not? It's absolutely, I mean, if you don't diversify your retirement with crypto, in my opinion, it's absolutely crazy. So I hope to hear from you soon. Have yourself a blessed day. I'm going to sign out. Take care.